Hello and welcome to the introductory video to CAD counting. It's a very ancient secret trading technique. It's been around for a while. I am not the originator of it. You can learn this from casino CAD counters, and you can also learn it from very old peak traders, traders who have been around for a while and they know the system of the market and its measured function, and they know where the measurement begins and where it ends. And I'm just here to introduce the concept. It's deeper than what you're seeing here, and it runs a bit more scarier as you go. Now, this is the true pattern, and the way you see them is by understanding arcs or bell curves, as some might put it. But this is just a very simple introductory video, okay? And what are arcs? They are bell curves that are measured within price delivery. And they basically satisfy two conditions. One must be equal to the other, or else it is considered a failed arc, okay? So there are multiple kinds of arcs, which we'll talk about and we'll see in examples. And the most important component in this is identifying where arcs begin and where they end. Okay, so I'm about to introduce the type of arcs or the kind that exist, and all you have to do is pay attention and try to find out exactly how to apply this in your counting. Okay, and it's gonna give you a lot of advantage. Okay, and this is just the first introductory video to CAD counting. It's the most simplest approach to how you can actually understand pattern recognition, pattern generation, and a lot of many other components that the world has not actually seen in real life videos on YouTube before. So I probably am the only first person who is actually doing this online. So the type of arcs, we have the straight kind of arcs, the forward arcs, the backward arcs, the upward arcs, the downward arcs, the Solomon arcs, and the interwoven arcs. This one, I am not talking about it online. I'm not that stupid. So you can have the starting points of all of these ones. I'm about to introduce them now. And all you have to do is go into your chart and study what I'm going to show you. I promise you, a lot of other traders know this. It didn't stop for me, and it's not going to stop here. A lot of you are going to discover a lot of things around this that's going to make you a lot of money. But for now, let me show you how to apply the straight arcs. So we'll take them one after the other and you see how they all pan out. Okay. And there is a lot that makes the gear turn in this trading system. It's not just the arcs, there are many other components, but this is the one that I can clearly show you. And it's simple because it's so simple, anyone can actually pick it up. Now, I'm starting with the straight arcs. It's in the order at which we earlier saw in the list right here. Remember, the interwoven arcs are the ones I'm not talking about, but we have six to consider. Now, we start from here and we count up into eight. This is the last candle up, right? This began within a single frame of operation that I would like to call the end of the rhythmic movement. And it began here and ended right here, right? And it took eight candles. And guess how many candles bring back the retracement in this area? Eight candles. This is called the straight arc. They usually begin from fair value gap and into fair value gap. In this part right here is a fair value gap. Up here, in this region that comes in here is a fair value gap. But down here has no fair value gap. But the nature of these gaps is that they always have to start within fair value gap into fair value gaps. Okay, so I made two of them. One of them zoomed out and one of them kind of, and okay, this is one where it's in a fair value gap and up here is another fair value gap. Okay, and it took one, two, three, and four candles to make this entire straight arc. They are kind of slanty, but I love to call them straight, so you have to work with what I actually make available. You can name it as it goes. So, and the next part is this: straight arcs make um they make the opposing direction. Okay, if we had an upward straight arc, then the next move is going to be in the opposing direction. You understand that? So it's a measured move. If we have 8 candles going up, then 8 candles going down would form the next retracement, or the end of the move might even occur around here, depending on if you're actually looking at a convergence or a divergence, as the case might be. Now, look at this here. There's no fair value gap, but yet I call it a straight arc. That's the thing you get when you enroll in my mentorship. You know how to identify these arcs, the ones that are complex and the ones that are simple, and the ones that you can capitalize on at every time. And I made it so cheap. It's actually just $100 for anyone who wants to sign up to know the real technique of how to identify this and how to understand how these black candles come in, how the green candles come in, and when they come in and when they go out. So I'm teaching you everything that has to do with market vibration, market rhythm, and all these arcs, the cool stuff. Okay, and it's just basically very cheap because I feel like you have to pay for you to actually take this serious. Okay, so in any case, $100 is not that much. So if you want to learn this and many other techniques, they're very valuable and they're easy for you to actually get to sign up. All you have to do is hit me on Discord, and the payment system very easy, and you get into the group. Already started teaching some few students, and I've already graduated. Oh, I'm about to actually graduate my first set of CAD counters. They're amazing people, and I love them so much. So they're they're just having straight measurement up, and you expect the opposing direction to be the same number of candles. Okay, there is a rule to it, but it has a plus and minus one rule, but we will not look into that for now. So next one is the forward arc. And only in forward arcs do you get forward movements. Okay, if you had a forward arc that goes this way, then you have to get the next count out to be the same number of candles. And you're using the lowest candle, by the way, not the green for your count. So you're starting from here. One, two, three, four, five, six, seven. And the lowest candle here was at 8, right? So starting from the next candle out, not this one again, we're starting from the next one. One, two, three, four, five, six, seven, 8. Why did this fail? We're supposed to have a continuation upward. That's a change in something else I'm not going to explain here. Okay, it's something very simple. Okay, and my students know this. Once they see it, they know it. This is actually one of the things I sent for them in their PDF, and so they would know. So, um, why this failed instead of us to have continuation? That's something you get when you are a private student. But what I'm expecting Price to actually do is this should give us the exact next retracement. And as you can see, it gave the retracement and then started the movement up just as expected. Okay. But then again, it didn't actually continue to go higher. So that's kind of sucky, right? And one thing that the mentorship would help you do, what one thing that the mentorship would help you know is when this high is formed and how far deep this retracement is going to go by how many candle. That's the advantage. Okay, so all of this right here, as you can see, the sharp bend, it's kind of very easy to spot over time, but this is forward arcs. Okay, and they equal forward movement. So if this number of candle makes 6, then the next candle should be 6 also. And this is the backward arcs. The backward arc starts here, and they make a curve of 8 candles, right? And there are many kind of backward arcs, and they equal forward movement. Okay, backward arcs actually equate forward movement. So if we had 8 candles in backward arcs, then the forward arc should actually give us more of the same kind of number of candles. Okay, so after once if I see these move right here, I'm waiting for these actually to make its move, and then I'm entering here. Or better still, once the 8 arc is already done, after this first candle, depending on what happens around here in terms of my students will know what this is, this region. Once the change comes in and a new fashion of wave is about to flow in, we we enter on this candle as CAD counters. not this one, but this candle. And our stop loss remains down here. If you're taking a trade on the lower time frame, that's how you take it. You wait for this candle to actually pan out. That's how you know that the forward arc is going to form. Okay. But then you have to also align it with the sequences to know when the highest movement is going to occur. And then when this retracement comes in, okay, you're out of the market already. And you're waiting for this guy right here for re-entry. So it's very simple. Using backward arcs, very simple. Okay. And they are actually very wonderful system of trading. And this is another arc right here. As you can see, I'm introducing a lot of um, confusion. In I'm introducing a lot of confusion. A lot of you will be confused by this, but some of you will go into your charts and begin to research this, and you have that aha moment, and you'll be really pleased that you kind of found this information. Okay, so we have this arc right here, equating to this arc. All right. So the next one is the upward arc. As you can see, it actually, as the name implies, has an upward kind of structure. So one of the key important thing is that you always have to make sure that they occur within fair value gaps, even though sometimes they don't. But the point at which they occur, they are known as the region of, maybe let's just say, choppiness or consolidation, and they usually have a lot of movements within them. Okay, but where to begin the arc flow has to be that most of the ones that should be easier to spot would be the one that has a fair value gap around this point. And the high here most likely might even come up and then sweep this guy and then continue lower. That's how you find upward arcs. Okay, this guy right here makes a U curve. That's the number of candles being 12. And when you project it downward, the next movement should begin at the 12th candle. There's always a manipulation when you're dealing with upward arcs and downward arcs. All right. And same case with the downward arc, there's always a manipulation. Okay. The downward arc produces manipulation before you get the real move. Now, see this right here. We have a curve that ends at the 16th candle, which is this guy right here, right? Then look at how many candles they used to manipulate before they took it to the 16th candle as the retracement. 1, 2, 3. They use 3 candles to manipulate, and then the entry point is here, and you're riding it up until this point. So you see what this is? This is like what ICT talks about being sell side liquidity, right? Or relative equal lows. Well, that's it. They have to first make sure that they kind of like lie to you before they begin the real move when you're dealing with upward and downward arcs. That's why I don't like to trade them that often until this first move is actually done. And then I'm waiting for like 2 or 3 days after that, if it's on the daily time frame, before I actually get to ride it until the 16th day. Now, the next one is the Solomon's arc. I call it the Solomon's arc because it's the most simplest to spot and it has the best function, and it's so easy you can use it right away. Once if you see a fair value gap and a candle punch into it, right, and then makes a curve and goes into another fair value gap. Sometimes it doesn't really need a fair value gap. It just goes into a place whereby there's a choppy piece of price action like an order block. Once you see that, that's a Solomon's arc. As long as the starting point has a wick that pushes into a fair value gap and then pushes down into another fair value gap, expect a similar movement going forward in terms of projection. Okay, so in the future projection, you're waiting for that, and your entry should be on the fifth candle. In the Solomon's arc, we don't like to enter on this candle, this candle, this candle, this candle, or any of these guys. We're waiting for the last guy to come in, and then we ride the wave going higher. Okay, so in the Solomon's arc, it's very simple to identify. And here's another one on the Nasdaq. Okay, and all you have to do is wait for this guy to form fair value gap, candle punches into it, and it takes that. Okay, so every single thing you see about fair value gaps, they are used as measuring points. They measure certain moves. Okay, so the measurement starts within fair value gaps, and the measured move in this case took a turn this way, and when it went lower, it made an arc, right? of 6 candles. And when you count, the next retracement came in at what? Sixth candle. In my lessons, you will know why this happens. Okay. It's knowledgeable. It's known to some of my students that are sharp. They should know this by now. And the ones that are still building up their understanding. I have two different set of students right now. The ones that are about to graduate, the ones that I'm about to release, because they've become MasterCAD counters already, and the new enrollment that I'm doing right now. And there's only like 4 people there, I think, and I believe there's potential for increase. That's why I still leave the mentorship open for now. So I think with all that I have introduced, my favorite one that I want you to focus basically on is identifying where these guys begin. Okay, they start this way and they go lower, right? And then this same movement is measured going forward. How you identify where this ends, that's the secret sauce. That's what you won't see in these videos. And that's where the whole struggle is gonna come for you. Okay, how you know where this guy ends and how to enter on this guy onto this guy, that's the secret sauce. Okay, so this guy right here starts the move, it goes down, but how do you know where this move is gonna end? So without any further ado, I will leave this right here for you guys to study on YouTube, but I'll be taking this video out in a few, I think, days or maybe weeks. I won't let this online for too long. So go ahead and pick your poison, okay? Find one of the arcs that works for you. Study it quite often. And if you feel the need to know more, learn why these candles are red and how to know when they're actually going to come in, when these greens are going to come in, all those things. Just literally know every bounce point in the market, catch every single retracement, every reversal, every turn, every curve. You want to know that? Well, enroll into the CAD Counters community where we teach the most impossible trading technique for literally nothing, literally. The reason I'm doing this is because I'm pissed at most of what we get to have in terms of results in our tradings. And it's really sucky, okay? It messes with us and our portfolios, and investments are always crushed. And by the time you're done with this, you know when rallies are gonna occur in cryptocurrency. You know the season of deeps. You know the season of buy. Warren Buffett and many other people, I believe, are cat counters because they know, they know the arcs and the condition that they create in the marketplace. They know all those things. And so come to the place of mastery, come to the house where we teach you how to become a fisher and not just a fish. Okay? So, um, thank you for watching, and I'll see you in, well, I'm not dropping in the video on cat counts. This is just the introductory. I don't think I will, it's not wise to teach any more of this online. So go ahead and learn to identify measured moves. Find them and begin to use them. Okay? This is free information. It's a gift, and I really want you to learn this. So find a way to master it. And when you do, have fun with it. When you find the sensitive parts of the arcs, keep them to yourself. Because when you bring them public, you become a target. That's why there are no many counters out there. I know ICT is one, I know Morpheus is one, and a lot of other people, but they're very low key and they don't teach it publicly. I think I'm the only one taking the risk right now. So, in any case, I believe that all the black van stuff, I've never actually believed it. It shouldn't exist. Okay, so this is just like the basics of what CAD counting is, the simplest part of it. And there are more robust structures to it, but this is the simplest one. Okay, I know market rhythm and vibration very well, and that's what I want to teach. So have a good time and see you in the next videos that I'll be doing on time dilation theory. Best of luck and happy trading. Bye.